Well, it's about 10:30 in the West Coast, and about and about 1:30 in the East Coast of North America, and it's about lunchtime in New York and Toronto. People, it's coming back from lunch around 1:30, and we are going to present here a short video to give you an idea on how to use technical analysis for the evaluation of the market movements, and how to use what you know about technical analysis to create trading and investing strategies. This is not intended to be a recommendation to buy or sell anything, and we are just giving a few examples on stocks or indices, just to give you a taste of what it's possible to do with technical analysis. Well, let's move to the charts, starting with the S&P 500. Well, we have been presenting those videos every day, and last Friday we mentioned that the market reached a downward trend line, and that's called the return line of a downtrend. And my evaluation was that the market was going to either move sideways or go back down to the downward trend line here. And the market indeed traded sideways for a couple of days, and today it's going higher and going to about the same level as those tops before. That region, it was a very confused region, and the prices went down, up. Each day was a different flavor in the market. We might experience the same type of situation, even though if that happens, we should not trade below the 1,300 level in the S&P 500. So we should stay within that range and not going that much lower than what we are now. And if that happens and the market behaves well in the next few days, maybe beginning or the whole next week, we will most likely see the S&P 500 index going higher and trading higher than February top. That was around 1340. So pretty much that's how I see the market moving. Still, there is no predominant force in the market, even though we have a very good momentum up now, and we can clearly see that this last movement was made in 5 waves, which is very good indication of a continuation of the upward trend. So let's move now to the Dow Jones Index. And the Dow Jones has been stronger than the other ones, S&P and Nasdaq. The Dow Jones is already trading at the top, so let's put here a horizontal line to serve as a guide for the next few days. And we should see the market retracing from that level. So today it's Wednesday, tomorrow is Thursday, and I expect a little retracement from those levels. So if you have been long and that's what I've been doing. If I've been long that upwards movement, I'll be lightening up now and waiting for new opportunities. The Nasdaq today made a very good movement. Let's put the chart here. I've been mentioning that the Nasdaq has been the weaker of the US indices, and today finally we could break and trade above that downward trend line, and it's a very good indication that there is still some hope for the Nasdaq, and we should see the index trading a little bit higher, and my expectation is that it's going to move sideways for the next few days. So at that point in the Nasdaq, the main force is the selling pressure, and still we need to see more buying pressure to make a consistent trend change for the Nasdaq. Another market that I've been commenting here, it's the natural gas, as represented by the United States Natural Gas Fund. It's an ETF that trades in New York, and it follows the natural gas price in New York. So that fund, the UNG, has been trading higher, and it started to correct. Today moved sideways, making a inside day. Inside days usually are reversal days, but in that situation here that we are in natural gas, still my main expectation is that we are going to trade lower and maybe test that line here that it's at $10.95. So still my expectation is for some downwards movement in prices to consolidate a support in that region, and then I expect natural gas price to go up again, at least until we reach the 200 period moving average. The United States Oil Fund, USO, also has been trading down for a few days, and today it started trading higher. The USO, it's in a better situation than natural gas, and also it's driving season. It's coming in United States, so it's expected that oil prices are going to go higher. It's the seasonal strength for oil and for oil companies. So what I think it might happen is that we are going to see oil trading sideways for a few days until we really get more strength here, and we start trading higher again. So I was long for a day trade. My day trade is over now in oil, so I'm waiting to see what I'm going to do with oil. One company that I would like to mention here, it's Exxon, which is in a very interesting movement. It traded lower, found support in the 50 period moving average region, and started trading higher. So my expectation right now is that we are going to trade to look for the top Bollinger Band, which is now around $86.17. So it's an interesting trade that's going on Exxon. I don't see any entry now, so you are either in or out. No entry. I don't see any entry today. At least not for the setups I use for my trading systems. That's no entry today. What I would like to mention at that point is that I bring to you those analyses to give you an idea on how to use technical analysis. However, I don't trade analysis. I trade systems. I study the price movements and try to isolate some type of movements and create systems that will give me a trigger to enter, manage the risk along the trade, manage the initial risk, the risk along the trade, and give me a condition for an exit. So that's how a trader can become consistent in the long term. It's when the trader or the investor follow a system. And one example of system for investing that was extremely popular, and it still is, it's buy and hold. Buy and hold is a system. However, buy and hold do not work. And the last 10 years, for example, people that bought and hold the index in North America, for example, Dow Jones Index, made no money. So better be careful with those systems that are like everyone believes it's the best thing to follow. Most of the people, 90% of the people, according to some researchers, or 80% of the people, according to some other people, lose money in the market. So if the majority is doing something, it means that the majority is doing something that's wrong. So if everyone is buying and hold, it means that it's wrong to do that type of strategy. So better to think more and study, get some knowledge, and create a strategy that suits you, your time available, and the capital you have to trade or to invest, and follow that strategy. In the long term, that's what's going to work. Well, I would like to thank you very much for watching, and invite you to follow me on Twitter, José Cid Trader, or to visit us at taacademy.com and take a look on the training course we offer. It's basically a complete training on technical analysis and investment and trading business planning. So thank you very much for watching, and have a great day.